Welcome to the Deep Dive. Today we're cracking open the story of a cryptocurrency that actually began quite a while ago, almost a decade back. It was sort of quietly building this foundational layer for institutions, only to, well, really explode onto the DeFi scene and make some serious waves in 2025.
That's right. We're talking Onyx Coin, or XCN. It's the native token of the Onyx protocol.
Yeah, you might hear it called Onyx Coin or Onyx Coin Crypto too.
Exactly. And it plays a pretty crucial role in the whole Onyx ecosystem, especially now as the project seems to be shifting gears a bit.
So our mission for this deep dive is to really unpack what Onyx Coin and its underlying protocol are all about. You know, how they function, the tech behind them, their market performance.
And crucially, what's been driving all this attention it's been getting, especially this year, 2025.
Right. We've pulled insights from various places, detailed articles, analyses from crypto platforms, magazines, trying to give you a really comprehensive, well-rounded picture. So let's peel back the layers. Where does this story actually start?
Okay, so to really get Onyx Coin, you have to go back, way back actually, to 2014. It didn't start as Onyx Protocol. It was originally Chain Protocol.
Chain Protocol, right. Founded by Adam Ludwin, the venture capitalist.
That's the one. And it got early backings, some strategic partnerships with, honestly, major financial players. We're talking NASDAQ, Orange, Capital One, Citigroup.
Wow, those are big names.
Yeah, absolutely. That early support really validated the direction they were heading in, even back then in the early days of blockchain.
But it obviously evolved. There was that big rebranding. Chain Protocol became Onyx Protocol, and the token, CHN, became XCN. That was March 2022, right?
Correct.
What was the thinking there? Was it just a name change, or was there a deeper sort of strategic pivot involved?
Oh, definitely more than just a name swap. You hit on it. The rebrand was meant to really enhance its identity, reposition it. It was signaling a much clearer focus on becoming a key player in, decentralized finance and these broader blockchain-based financial solutions.
So like a statement of intent.
Exactly, showing where they saw the future of the protocol heading.
Okay, so at its heart, XCN is both a utility token and a governance token. It powers the Onyx protocol, this DeFi ecosystem built on Ethereum.
Right, so it's an ERC20 token. It lives on Ethereum, doesn't have its own separate blockchain.
Gotcha. You could almost think of it as the fuel, maybe, keeping the sophisticated financial machine running smoothly.
That's a good way to put it, yeah.
But when we say sophisticated financial machine, what's the actual problem Onyx protocol is trying to solve, especially for companies looking at blockchain?
Fundamentally, it's designed as a cloud blockchain infrastructure. The big idea is to let companies easily create and deploy better financial services, things that are scalable and secure using blockchain.
Okay.
See, a lot of companies, they want to upgrade to blockchain tech, but they're wary of the risks tied to the big public networks.
What kind of risks are we talking about there? Volatility, security, something else?
It's a kind of a mix. Volatility is definitely part of it, sure. But also things like unpredictable transaction fees, network congestion, the stuff you see on public chains.
Right. Institutions need predictability.
Precisely. Predictability control those are paramount for them. Onyx aims to offer that stable, secure environment specifically for their financial applications. They can build these controlled, private, independent networks, but still get the blockchain benefits.
That makes a lot of sense. Okay, so that's the vision. Now let's get into the nuts and bolts. How does Onyx protocol actually work? What are the core features that let it do all this?
Well, it enables those scalable and secure applications through a few key things. First, decentralized governance. XCN holders actually get to participate in decision-making, like voting on protocol upgrades.
So you're not just holding, you're shaping it.
Exactly. Your stake gives you a voice. Then there's staking. You can stake your XCN, earn rewards, and naturally you use XCN to pay for stuff on the network, like transaction fees, running smart contracts.
Standard utility token stuff.
Pretty much. Plus, it's built for cross-chain compatibility, so it can work with other blockchain networks, which is, increasingly vital in today's crypto world.
Okay, so that covers the what and a bit of the how. But for any financial infrastructure, especially blockchain, the real meat is often the underlying tech, right? The engine. Mm-hmm. What makes Onyx's technology stand out? What's the secret sauce for scalability and security?
Right. And this is where it gets, pretty fascinating, I think. It builds on Ethereum security, which is already strong, but then it adds its own protective layers.
Okay.
What's really interesting is its scalable infrastructure. It uses the UTXO model and something called compact proofs.
UTXO, like Bitcoin uses.
Similar concept, yeah. Think of Ethereum's model like one big bank account ledger Every transaction changes the central balance. UTXO is more like digital cash. Each note or unspent transaction output is separate. This allows for more things to happen in parallel, potentially better privacy sometimes, making it really efficient for high volumes.
And the compact proofs?
They essentially bundle and verify a whole bunch of transactions using a tiny cryptographic footprint. So you get maximum data flow, verified, with minimal overhead. Super important for institutions.
That efficiency sounds key. You also mentioned a principle of least authority. Can you break that down a bit? Why is that appealing, especially for financial institutions?
Yeah, think of it like this. In a lot of systems, the entity that can update the record book, the ledger, can also move the money, the assets.
Okay, that sounds risky.
It can be. Least authority splits those powers up. So the part of the network that records transactions is separate from the part that controls the assets. Even if, say, the recording part gets compromised somehow, it can't just steal the assets on its own.
So it reduces the attack surface.
Dramatically. It's about granular control, which is fundamental when you're handling lots of sensitive financial data.
Got it. And operationally, how does it handle multiple independent blockchains?
Right.
Like if different companies are running their own networks on Onyx.
Well, it's designed as a multi-asset platform from the ground up, supports various cryptocurrencies, NFTs, makes it really versatile for managing different digital assets. It uses what they call issuance programs to define and issue assets.
Okay.
And then these assets are held by control programs. These are basically the smart contracts written in a flexible, Turing-complete language. So you can build pretty sophisticated, tailored logic for specific institutional needs.
And looking ahead, it's supposed to be future-proofed with modular upgrades. What's the big win there? Not needing hard forks.
Oh, that's huge. Hard forks, they can be messy, split the network, cause downtime, give developers headaches.
Yeah, we've seen that happen.
With modular upgrades, they can add features, update logic, scale things up, all while maintaining backward compatibility. The network stays relevant, keeps innovating, but without those disruptive breaks or forced migrations you see elsewhere.
Okay, that flexibility sounds really valuable. So shifting gears a bit, let's talk utility. Beyond just speculating on the price, what does holding XCN actually do for someone in the ecosystem?
Right. It's definitely more than just a speculative asset. Its utility hits several key areas. Governance is a big one. XCN holders are active in the Onyx DAO. They vote on proposals, improvements, key decisions shaping the platform's future.
And each token is a vote, basically.
Each stake token, yeah.
Yeah.
So your influence scales with your stake. Then there are the transaction fees you need XCN to pay for operations on the network.
Standard gas fee equivalent.
Exactly. And staking, like we mentioned, you lock up XCN, you earn more XCN as rewards. Plus, holding or staking can give you access to premium features, discounts on plans, and it's used for their Onyx Cloud and Sequence products, too. So it's really woven into the fabric of the platform's economy.
And the tokenomics themselves, it's got a fixed supply, right? Just over 48 billion XCN.
That's the total, yeah. Permanently fixed, so it can't be inflated, which makes it a scarce digital asset. That fixed supply, combined with the utility, is definitely a core characteristic.
There was also that big shift towards community control back in 2023. Chain handing over authority to the Onyx DAO. How significant was that?
It was huge. It marked a real transition to becoming a truly community-led ecosystem. Now it's the DAO participants, the token holders, who propose changes, vote on things like token emissions, governance rules. The power is genuinely in their hands now.
And we saw that with proposal OIP 51, didn't we?
Yeah, that's a perfect example. OIP 51 restructured how XCN rewards were emitted, aligning it better with usage growth and making the protocol more sustainable long term. And it passed through a majority vote by the DAO members. Shows the system working.
Okay, now here's where things get, as you said earlier, really interesting, especially looking at 2025. The OIP 56 update. Passed in May. What was the headline feature there?
Gas-free voting, that was the big one. It completely eliminates transaction fees for participating in governance votes.
Huh. When I first heard about gas-free voting, I immediately thought, okay, that saves me money, which is nice, but what's the real impact supposed to be? Does it actually change user behavior?
That's exactly the point. It aims to massively boost user engagement, encourage way broader community involvement by just removing that financial hurdle. Sometimes gas fees, even if small, can stop people from bothering to vote.
Makes sense. And OIP 56 did more than just that, right?
Yeah.
There was a big token shift involved too.
Yeah, this was significant. If you connect it to the bigger picture, OIP 56 recommended moving control of almost 90 billion XCN tokens. These were tokens held in internal team wallets.
90 billion. Wow. Where did they go?
to the Onyx Foundation, which is set up as a decentralized, community-guided organization.
Okay, that sounds like a major commitment to decentralization. But, how often do we see projects actually pull this off smoothly? Doesn't it sometimes lead to power vacuums or other governance issues down the line?
That's a really sharp and critical point. Lots of projects talk decentralization, but actually managing it, keeping the community engaged, preventing new forms of centralization. That's the hard part. So the real insight here isn't just that they moved the tokens. It's how Onyx is trying to make it work, incentivizing participation with gas-free voting, seeing how the community actually steps up to manage that huge treasury. The success isn't just the yes vote on OIP 56, it's the sustained active governance that hopefully follows. That's what could really set it apart.
So the idea is less centralization risk, less manipulation risk, and unlocking potential for grants, staking, development, all run by the DAO.
Exactly. It aligns Onyx Coin much more closely with those modern DeFi ideals, transparent treasury, community control. It really feels like a turning point towards becoming a fully DAO-managed asset.
Another huge driver for attention in 2025 was the Goliath mainnet launch back in January. Onyx's Layer 1 blockchain aimed specifically at institutions.
Yep. And the performance numbers were pretty eye-popping.
Yeah, you mentioned around 24,000 transactions per second using proof of stake.
Yeah.
That's a lot. What does that kind of speed actually mean for institutional adoption? Is that the holy grail they've been looking for, or are there still big hurdles?
It's a massive step towards the holy grail, I'd say. For institutions, especially in areas like high-frequency trading or large-scale settlements, that kind of speed and scalability is non-negotiable.
Right.
So when Goliath went live, you definitely saw investor confidence surge. It wasn't just a token concept anymore. It was part of a working protocol delivering real throughput. Hurdles. Sure, they still exist regulation, getting traditional finance culturally on board, but the technical capability is now undeniably there.
And we shouldn't forget the tokenomics changes either. The team brought in a deflationary fee model, improved staking rewards.
Both of which tend to create scarcity, encourage people to hold long-term. That's often a recipe for upward price pressure, especially when you pair it with actual ecosystem upgrades like Goliath.
Speaking of price pressure, Onyx Coin has definitely seen its share of volatility. It had that impressive run, what was it, 0.002 and up to nearly 0.05 earlier this year.
Yeah, around February 2025, but then corrections followed, naturally. There was that absolutely wild period. A technical breakout sparked a rally over 2,000% in just 2 weeks.
2,000%.
Crazy, right? But then it dropped 85%. Still, it showed sustained interest, bouncing back another 125% in April. It just really underscores the extreme volatility here.
That kind of swing, 2,000% up, 85% down. How does a project targeting institutions even explain that? Don't enterprise partners want stability above all else?
It's definitely a challenge, no doubt. You can point to the improving fundamentals, the tech, Goliath. But the reality is the broader crypto market's speculative nature pulls everything around, even projects with institutional focus.
So the pitch isn't short-term price stability.
Not really. The long-term strategy has to be about demonstrating consistent utility, robust infrastructure, which is Goliath's purpose. Institutional partners, ideally, are looking past the daily price swings to the underlying tech, the potential efficiency gains, the regulatory compliance efforts. For many, the potential rewards still outweigh that inherent market volatility.
Okay, so fast forward to now, June 2025. Our sources put the price around what? 0.10 market cap, around $522 million. Rank hashtag 111 or so on CoinMarketCap.
Yeah, those numbers fluctuate daily, but that's the ballpark.
Which raises the big question. With all this going on, what are analysts saying? Are they bullish, bearish? It seems pretty divided.
Completely divided. You've got some suggesting sell. They point to the volatility, maybe concerns about fundamentals keeping pace with price or the gap between the market cap and actual network activity.
Okay.
But then you have others who are much more optimistic. They see OIP 56, the move to the foundation, Goliath mainnet. They see these as major catalysts for recovery and future growth. They believe the tech and the decentralization push will ultimately pay off.
And the price predictions reflect that division too, right?
Yeah.
Some moderate, some wildly bullish.
Exactly. Forecasts are all over the place. Some see it maybe staying in the current range, maybe slight growth to, say, 0.01 or so. Others are looking towards 0.03 cents. And then you get the super optimists calling for like 75 cents eventually.
Wow, 75 cents of optimistic.
Yeah.
So if you're looking at XCN, trying to make sense of this mixed bag, what are the key factors to really consider?
Okay, let's try to unpack it. First, market position. Yes, it's way down from its all-time high of $0.18. That could mean room to grow, but it also screams volatility risk.
True.
Second, the tech foundation. It seems solid. Clear use cases emerging, especially with Goliath and that institutional focus. That's a strong base. Third, market adoption. Trading volumes seem to be growing, more exchange listings. That suggests increasing liquidity and interest, which are generally positive signs.
But, and it's a big but, we have to reiterate, it's still a high-risk asset. That volatility is real.
Absolutely. While the fundamentals look like they're improving and future growth is definitely plausible, it really hinges on Onyx actually onboarding those institutional users, getting real-world adoption, and keeping developers engaged in a super competitive DeFi space.
Yeah, its long-term sustainability probably depends more on proving that utility consistently than just relying on market sentiment or hype cycles.
Couldn't agree more. It needs to deliver on those real-world applications.
Now, thinking about that competitive DeFi landscape, how does Onyx Coin really stack up against, say, the big DeFi players like Uniswap or Aave? What's its unique selling point?
That's a great question because, yeah, it's crowded out there. XCN does have some clear differentiators, though. First, that governance model, the token-weighted DAO using the OIP system, it feels deeply decentralized, giving holders real clout over the protocol's direction, even tokenomics, like we saw with OIP 51.
So more direct community control than some others.
Potentially, yeah, especially with the active participation they seem to be fostering. Many tokens have DAOs, but the level of granular control here seems noteworthy. Second, and this is key, the high-speed transactions via Goliath mainnet, explicitly designed for institutions. Uniswap, Aave, they're giants, but more in the consumer-facing DeFi world. Onyx is carving out a niche targeting enterprise and institutional needs with performance. Few others can match for that specific market. It's building infrastructure.
That institutional focus really is the differentiator then. Okay, so if someone listening is interested, how easy is it to actually acquire XCN?
It's pretty accessible, actually. You can find it on most major crypto exchanges. Kraken, Coinbase, KuCoin, Gate.io, HTX, MEXC, CEX.io, even Revolut, and decentralized exchanges like Uniswap too.
And payment options.
Usual suspects. You can often trade it against USDT or use fiat like US dollars, euros, British pounds via bank transfers, debit cards. Some platforms might support Apple Pay or PayPal too.
Good to know. And storage. Just any ERC20 compatible wallet.
Yep, exactly. Since it lives on Ethereum, any wallet that supports ERC20 tokens will hold your XCN just fine.
All right, so wrapping things up, Onyx Coin really does seem to represent this fascinating mix of DeFi functionality, trying to empower users, but also building serious enterprise-grade blockchain infrastructure.
Yeah, the tech seems robust, the utility is becoming clearer, its market presence is growing. It's definitely a project to keep an eye on in this constantly shifting crypto space.
But as always, we have to say this isn't financial advice. Any cryptocurrency investment carries risk. Do your own thorough research. Think carefully about your personal risk tolerance before making any decisions. The volatility is real.
Absolutely essential.
So here's a final thought to leave you with. Given XCN's recent moves becoming fully DAO managed, launching the institutional-focused Goliath mainnet, what really defines success for a decentralized project like this in the long run? Is it all about the price action and speculation? Or is it more about real-world use, sustained adoption, and the actual strength and effectiveness of its decentralized governance? Something to chew on.